Now, I think gold still can run to about 26.50, maybe all the way up to 27.50. And if it does, there's probably going to be even bigger premiums because it is going to be like headline news. I mean, I think gold's ready to pop and have a very nice run of 8 to 10% from where we are right now. And that I think is going to suck the masses in. And on multiple time frames, the daily chart and the monthly chart time frame for gold, when we project forward using Fibonacci extension, which is a momentum technical indicator, it goes to about 2,700. And so when gold hits that level, the media will be all over it. The average investor will just be starting to buy it because now it's marketed on every news station as like the best asset to be in.
Since making a sustained break above $2,000 per ounce in late 2023, gold has maintained its upward momentum. Despite recent global market volatility, particularly with the unwinding of the yen carry trade, the yellow metal has remained remarkably stable. Hovering around $2,500 per ounce, gold has achieved a 25% gain from its January 2024 price of $2,000. Gold's outlook remains strong, with prices projected to rise to $2,700 per ounce by mid-2025 and potentially reach $3,000 per ounce in the longer term. ChrisVermeulen sees gold potentially running up to $2,650 or even $2,750. If gold reaches these levels, he expects significant media attention, which will further draw in retail investors. He predicts that once gold hits the $2,700 mark, the media will heavily promote it as the top asset to own, leading to a surge in purchases by average investors. However, Vermeulen also cautions that after reaching these new highs, gold may face a pullback. He advises investors to be prepared for potential volatility. World Gold Council updates as at May 2024 indicated that China's official holding of gold has now risen to about 2,300 tons, or just under 5% of total reserves. This is a jump of about 20% from the 1,900 tons just 2 years ago in 2022. Record-high gold prices may be grabbing the headlines, but silver, often seen as the yellow metal's less glamorous cousin, is truly shining in this price rally. Silver prices have surged 35% this year, reaching 12-year highs at around $32 per ounce. This impressive rise is fueled by strong industrial demand, particularly from the booming solar panel industry as the world shifts toward green energy. Vermeulen notes that while silver is more volatile than gold, it has substantial upside potential, possibly reaching $34 to $36 per ounce. He acknowledges that silver may not always outperform gold, but it generally trends upward. Let's dive into the video for more insights. Before we get started, make sure to subscribe to the channel and hit the bell icon to stay updated with the latest content.
I think when gold starts making new all-time highs, I think it starts to pull more people to the commodity. And so then it becomes kind of a, retail investors are calling everybody to try and buy some physical metal. And generally they can squeeze the premiums higher because now there's demand for it. So I think we could see, premiums continue to rise. When premiums rise, it means there's a lot of demand. And usually when there's a bunch of demand, usually that move is getting close to being done. Now, I think gold still can run to about 26.50, maybe all the way up to 27.50. And if it does, there's probably going to be even bigger premiums because it is going to be like headline news. I mean, I think gold's ready to pop and have a very nice run of 8 to 10% from where we are right now. And that I think is going to suck the masses in. And on multiple time frames, the daily chart and the monthly chart time frame for gold, when we project forward using Fibonacci extension, which is a momentum technical indicator, it goes to about 2,700. And so when gold hits that level, the media will be all over it. The average investor will just be starting to buy it because now it's marketed on every news station as like the best asset to be in. And really, that'll probably be the top because that is all the price action leading up to here, going back many years, are actually saying 2,700 is where gold should stall out and then start a pullback, which maybe that's when the rest of the economy and the stock market start to pull back as well. So there's upside potential in gold. It is a lot more stable than pretty much everything else. But I think it will pull back, as you mentioned, with the market eventually. And eventually it'll fall out of favor and premiums will drop and it'll be a great opportunity because nobody will want it. And the next pullback in gold, I think, is going to be a phenomenal opportunity for like a 5-6 year run. It's going to be the next big wave up in a super cycle that we haven't seen really since early 2009 when gold just skyrocketed for several years to the upside. That's what gold is setting up for. Silver is a lot more volatile. I think silver could run to about $34 or $36. So it's got some pretty good percentage upside from here. It's super volatile. It doesn't always move better than gold in a situation that we're kind of in right now, but generally it wants to go up and to the right, so higher. So I like them both. I don't like miners as much simply because they're part of the stock market. And if the stock market does start to pull back, the miners might pull back a little bit with them because they're stuck in it. But we're in a sweet spot right now where gold, silver, and miners, historically, in this type of scenario that only happens, once every 10 or 15 years, typically all three of those assets around precious metals will move up higher for a certain period of time. And so I think they're in favor for another month or so.
Historically, stocks have generally outperformed gold, but there are exceptions. Over the past 20 years, for instance, gold has outpaced the S&P 500. In the current record rally, gold prices have surged about 20% year to date, outstripping the gains of the S&P 500 by a few percentage points and even outperforming technology stocks. Despite this strong performance, gold has seen a net outflow of $2.5 billion this year, indicating that investors have been locking in profits during the precious metals' impressive rally. ChrisVermeulen believes that the stock market is nearing a significant correction, driven by weakening technical indicators. He advises investors to adopt strategic approaches, such as investing in gold and silver, to protect their portfolios and take advantage of opportunities that may arise during the anticipated market turbulence. Now, let's redirect our attention to a video.
We look at the weekly chart of the SP 500 and we look at the weekly technicals, and momentum and sentiment of where money is flowing among all the different asset classes. When we step way back and look at the big picture, we actually have the stock market set up at the same type of scenario that we saw back just before the 2022 bear market started. So we are like right there on the cusp where the underlying technicals from a big picture standpoint have broken down and price is still holding up, but pretty much everything under the hood, kind of hidden away that most people don't see about the financial system or the stock market, has completely broken down and crumbled. So now it's just a matter of, I think we just need a few more weeks potentially. The market might grind a bit higher, but overall, I do think we are very close to a major market correction, and it's going to catch a lot of people off guard, I think. I think over the next couple of months, or at least the next month or so, I think precious metals, I like physical gold more than silver or miners. I think gold has got more upside. It's very stable, very slow. But if we do go into a big market correction, you really do need to have a strategy. It really is that simple. You need a way to identify when an overall major trend has turned a corner, when it starts to go down, and you have to have position and risk management in place saying, okay, well, hey, if the bull market is coming to an end, I need to get out of them because they're about to drop. And so most people don't have a strategy. They just kind of hold on for their dear life and just hope and pray it's not too bad. But you need a strategy. I use technical analysis, which allows us to follow price, money flows, sentiment, cycles, all kinds of different ways to analyze the market. And so that tells us when the market has lost its momentum, has finally actually turned a corner. And once it does that, then we move to a different asset class. And bonds, which is why I think it's exciting, are finally favorable where we could actually maybe be able to move back into bonds for once. We haven't been able to be trading bonds for a couple of years since they've been going down, but they might actually become a very good play. So that could be one of the ways to play this, is to actually get 100% out of stocks and eventually get into bonds once the stock market does roll over. Generally, we see precious metals do very well after a major bull market phase, which we have had. We've had a tremendous bull market in equities, but now we're starting to see signs that precious metals, gold is hitting new all-time highs this week. And we're seeing we're starting to see the stock market start to struggle a little bit more. We had a massive wave of selling in the Magnificent Seven a couple of weeks ago. We saw the volatility index spike 176% the morning that the market gapped sharply lower. Really, everyone ejected out of their plays. We haven't seen volatility and that much fear since the COVID crash and the 2008 financial crisis. So right now, we have been seeing the Magnificent Seven kind of drift higher, but it doesn't have a lot of power behind it. Now that people are debating, hey, is the big tech kind of AI move done for now, or is it going to get some legs? And that's where the market is trying to figure out does it have a little bit more upside, which I think the stock market in general does. The Magnificent Seven might actually hold things fairly neutral, though, because they're a huge chunk of the index. And I think a lot of people have got hit pretty hard and they're nervous to get back in. So I think as a whole, the majority of stocks are going to grind their way higher, a few percentage points maybe over the next couple of weeks. But overall, I mean, it's really going to come down to if people start moving into the big techs again, or if they're too scared now.
On Friday, an ounce of gold traded up 1.23% to $2,547.60, just $23 shy of its record intraday high reached on Tuesday. With prices soaring, a standard gold bar now costs $1 million. Gold has become the second largest reserve asset, comprising 16.1% of global reserves compared to the euro's 15.6%, and it boasts one of the lowest correlations to stocks among asset classes. What's your prediction for gold prices over the next year? Do you see them reaching new all-time highs? How do you prepare your portfolio for a potential market correction? Join the conversation. Share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.